So most people think that when you buy an investment property, it's like buying a primary. You've got to do bank statements, pay stubs, W-2s, P&Ls, the whole shebang. What if I told you that there was a loan that just looks at the property? It doesn't even want to look at you. Would you be interested? Have you ever heard of a DSCR? If not, let's get into it. So DSCR stands for Debt Service Coverage Ratio. And it does sound super fancy, but it's really not. It's a quick and easy loan, especially if you are an investor looking to build up your empire. All it does is make sure that the rent that would be incoming into the property covers the mortgage. That's it. Think about it like if you were looking at a duplex and you're like, well, what would the rents be? All that kind of stuff, right? So imagine the rental would be about $2,000 for a duplex, but the mortgage is about $1,600. This would be perfect for a DSCR loan strictly because the rent covers the mortgage. Now, one important part of this process is the appraisal. Typically, when you are buying your primary, you have an appraisal, unless you did an appraisal waiver, but we're just going to say you got an appraisal and you're looking at the market value. You want to make sure that you're not overpaying for a property. When it comes to a DSCR, we are looking at the rental comps. We want to know how much rental income can this bring in and does it cover the mortgage? If it does, it's a great let's go for it. Now, if it doesn't, you as the investor, you have a few options, but typically if it doesn't meet, then the loan is a non-starter and you get the benefit of knowing, yes, this home was a cash flow. No, it doesn't have the cash flow. Let's go find another property. And that is a beauty of a DSCR loan. So let's talk numbers about a DSCR, because if you're an investor, you definitely want to know the numbers. So typically you're going to need anywhere between 15 to 20% down at minimum, because remember, this is an investment property. It's not like a primary where you get the low down payments. So you're getting that, and of course the interest rate is going to be slightly higher because this is an investment. But I want you to think of it as like a flexibility, because we're not checking any of your stuff. We're not looking at your income, your assets, none of that stuff. We want a down payment, we want a good credit score, and you want the flexibility to keep getting more properties, building your real estate empire, and we got to have the cash flow. And this is exactly how my investor clients are building their empires, by using the DSCR. Because you could do the house hacking route. You buy a home, live in it for about a year, 2 years, then you move on to the next one, and the next one, and the next one. With a DSCR, if you've got the 15 to 20%, as long as you've got that down and a good credit score, if that property pops up and you want it, you can get it with that DSCR. And you get the benefit of knowing that with the rents that are around, you are able to get cash flow versus, oh, I hope I can get a renter and be fine and all that stuff. So if you definitely want to scale, this is definitely the loan that you need to be looking at. So if you've been waiting for the right time to start investing, look at a DSCR loan. It could be exactly what you were looking for. My name's Elizabeth Johnston, and I'm a mortgage broker who specializes in helping investors structure these deals. If you want to see if this program could work for you, drop me a comment, send me a message, or click the link in the description and book your discovery call. And also, please don't forget to like, subscribe, and turn on notifications so you know when my next video comes out. And let's get your next investment property started.